Here's a scary truth. Your business can be profitable and still go bankrupt. How is this even possible? It all comes down to the cash flow statement, the financial statement most entrepreneurs ignore until it's too late. This is where you're going to see the reality of your liquidity. Do you have enough cash on hand? Is there enough money coming from your receivables to cover your obligations so you don't run out and start bouncing checks? Because that's when you're in really big trouble. Today, I'm showing you exactly how to read your cash flow statement so that you can spot the warning signs before you run out of money. Let's dive in. So again, we're looking at August of 2025, and what we can see is our cash flow. So we have our net cash from operations, $75,000. That actually happens to equal our net profit. It doesn't always, but in this case it does. We don't have any receivables or payables. This is a business that everything is coming through in cash. It's a cash business, so there's no receivables, there's no payables. Makes it a little bit easier, but if you had some, you would see them here in this part of the cash flow. We don't have any investments, so there's no net cash from investing, but if you had it, this is where it would show up. Assets purchased or sold. If we had purchased, say, another landscaping truck, this is where we would see that. If we were selling our landscaping truck, this is where we would see that. Now, net cash from financing, you can see that there's negative $75,000 here because there's that loan, there's that debt, and there are some distributions. You can see those here, and then there's a change in short-term debt, and that's okay, you can see it there. And then cash at the beginning of the period, net change in cash, and cash at the end of the period. So it gives you a picture or a map of where your cash is and where you owe cash. And that's what this statement is really gonna do. Now, if you wanna create and track your own cash flow statements like this one, LivePlan makes it incredibly simple to monitor your cash position in real time. Right now, you can get 50% off the first month of LivePlan using the link in the description below. It automatically generates all 3 financial statements we're covering in this series, so you always know where your money is going. So things to watch out for. Is operating cash enough to support operations? Are you depending heavily on financing or investing to stay cash positive? That could be a little bit of a warning flag. If you're always pushing on your credit line, or that loan you have is maxed out and you just can't seem to do anything except maybe pay back the interest and you're not actually paying back the loan, these can be red flags. You can see those on that cash flow statement in combination with your balance sheet, and then you can take some action. You also want to look out for negative cash flow trends. Even with good sales, that can signal a risk, right? If you are putting out more cash than you're bringing in, even if the revenue's coming in, the profits are going up, you might have some issues with collections, for instance. Maybe you need to go out and collect your receivables a little bit more quickly so that you don't run out of cash. A little bit of a red flag doesn't necessarily mean much if you have it under control, but if you're not aware of it and your cash flow trends are trending negative, you should take a look and you should make sure you understand why, and you have implemented ways to kind of bring that back and start to get back into positive cash flow territory.